See those expenditures being a little bit consistent, but they're still pretty large expenditures. You know, the truck expense, when the trucks break, they're expensive to fix. You go to the very end, you can see our total expenditures last year were $5,177,000, which is comparable to the previous year. And then at the bottom, we have our other financing. You know, we've had transfers from the water and sewer fund into the general fund to cover their share of the administrative overhead. We've had crime control transfers for salaries that is varied each year. And crime control was transferring money over to buy vehicles in 18 and 17, but there wasn't a transfer in 19. All right, so that's just comparing actual to actual. Now let's go to page 54. And it's a several page schedule, so we need to get to the first 54. So this is a comparative schedule of revenue and expenditures for the water and sewer fund. Now, the water and sewer fund is accounted for as a for-profit business, unlike the general fund, which is accounted for using fund accounting. If the water and sewer fund makes system improvements or buys the vehicles, those get capitalized and depreciated. So the purchase cost of those will not be seen on this schedule. They're assets that we depreciate. You can see there the trend in our revenues. Our water revenues were down last year. Our total revenues were down. Our water distribution expenses were up. Personnel was up. For the water treatment, our expenses were up. Our water purchase cost was up significantly last year. Again, when you look at the water and sewer, when you look at their repair and maintenance, things in the system break, they're expensive to fix. Sometimes you can see big repair numbers. Sewer collection, you can see our wastewater treatment expense was up. The next page has the water and sewer administrative costs, which are fairly consistent. Our operating income last year was $121,000. In 2018, it was $463,000. So the big effect there was a decrease in revenues, and also an increase in some of the larger purchased water sewer treatment costs. And we have the non-operating revenues, the investment income, and since we're using for-profit accounting here, when we pay the bond debt, it's not an expense. And we also pay the interest on the bond debt, but because it's under a construction project still, that interest gets capitalized until those projects are completed. So that gets capitalized and added to the cost of the water and sewer. So we won't see any interest expense here. Bottom line, after the transfers last year, the water and sewer fund had a deficit of $40,000. The year before, it had a surplus of $483,000. Included in 2018, we did have some current county funding of $195,000. They do the CDBG sewer every other year. So that funding was revenues in that year. So that's the water and sewer fund compared to the previous years. The next page, page 55, is water and sewer compared to the budget. We have the same, the original, amended, the actual, and the variance. So you can see our water and sewer revenues were $53,000 under budget. Our expenses, the water distribution expense was $20,000 over budget. Water treatment expense was $218,000 over budget. That's all in the water purchases. Water purchases last year were $246,000 over budget. Sewer collection was right on budget. The administration was very close. Our total operating expenses were $2,684,000, which was $229,000 over budget. Our budget estimated that we would have an operating income of $798,000. Our actual operating income last year was $515,000. And then the non-operating cash revenue expenses, because the budget is kind of on the fund basis, while the actual is on full accrual, you kind of need to ignore those. Well, there's depreciation in the actual numbers down there, but there's no depreciation in the budget. The budget includes paying the interest and the debt on the principal, but in the actual numbers, those are the paying liabilities or the interest that's capitalized. So I would just focus on the operating income, nothing after that. All right?
You know, Bill, on that capitalized interest, GASB 89, changes that to the future, not in this year, but that's something we'll be sure that it'll make it easier because we'll just expense the interest.
How are they handling a project that's in process?
I think it's effective as of the date that goes into effect. Yeah. So just that point from that point forward.
Okay, we'll figure it out. All right. Now, real quick, I'd like to look at back towards the front on page 13. Page 13 is the balance sheet for the general fund, or the governmental funds. It's the assets and liabilities as of September 30th. Now we're back using the fund accounting. So here we have the general fund, the EDC, the crime control, the stormwater. Now this year we have these, I'm calling the other non-major funds, which are the two new nonprofit organizations, the animal shelter and the community center. We did have a little bit of revenues in the animal shelter last year. You can see our total assets over on the right-hand side are $3,759,000. That includes cash and receivables and prepaid expenses. So we're using fund accounting here, so we don't recognize our fixed assets, our property and equipment is not recognized. We have our accounts payable, the deferred inflow of resources. Here is the delinquent property taxes. And then the difference between those items is our fund balance. Our total fund balance is $3,329,000, but only $1,666,000 of that is unrestricted. So the rest of that fund balance is spoken for. Whether it's court security, EDC, or crime control, drainage, which has $604,000 of fund balance, and we have assigned fund balance for the oil and gas revenues and some donated funds. All right, so that's the balance sheet for the governmental funds. Now let's look at page 17.
Question, Bill, or Marvin, on as we're receiving additional gas royalties, I know they've fallen off, but is that number continuing to change, or is this the initial amount?
Well, that's the up-to-date amount. That's what we cumulative. All right, so page 17 is the statement of net position for the proprietary funds, which is the water and sewer fund. So again, the water and sewer fund is using full accrual accounting, for-profit accounting. So you can see there how much cash they had. 592 was unrestricted. Down a little bit, you see their unrestricted cash, which was $7 million. Most of that is the unspent 2017 sewer and water bond funds. Now they're held in escrow. We do recognize our capital assets. We depreciate those assets over their estimated useful life. So the water and sewer capital assets, their net cost is $17 million. We have our liabilities. We have our non-current liabilities of the bond payments. And we do show here the pension liability. We'll talk about that in a second. So the bottom line, the net position of the water and sewer fund is $10,286,000. The $9,772,000 of that is in those capital assets. So they are restricted equity or retained earnings or